Hello and welcome to this daily market commentary for Thursday, the 21st of November 2019. And as I wake on Thursday, I do the usual scouring of the news services for relevant headlines. And the first to catch my attention comes from China. In fact, three of them. The first notes that yesterday's rumors about possible disagreements in trade talks are not true. The second suggests that China have invited the US trade negotiators for more talks. All sounds pretty good so far. The third is that China absolutely and resolutely opposes the US passing of the Hong Kong Human Rights Bill in Congress, stating it will severely damage bilateral relations. Not so good. So how does FX and the equity markets react to these mix of headlines in Asia? Equity markets in Asia and Europe are all pretty much in the red to start the day. However, US futures initially point to a mixed open. European session would see the dollar generally lower, with euro touching the high up towards 110.96, sterling 129.70, and Aussie to 69.12. Dollar yen is once again the exception, starting the US day at 108.60. Having dealt as low as 108.28 in Asia. Gold begins the day at 14.67. The first headline of the North American day suggests the US will delay further Chinese tariffs, which is obviously is a positive. So once again, we get a quick knee reaction with dollar yen jumping 15 points from around 108.54. Up to 108.69, and we also get a push higher in US equity futures. The Dow Jones turning from around negative 40 to a plus 40 in fairly quick order. Next up, we have some US and Canadian data to get the USD going. The Philly Fed Manufacturing Index comes in stronger than expected at plus 10.6, while Canadian ADP non-farm employment data comes in worse at minus 22,600. The only real reaction in the FX market comes from dollar CAD, which jumps from 133.05 up to 133.25. However, that is a short-lived move, as we get some comments from the Bank of Canada's Polos, who says he thinks monetary conditions are about right, which sort of contradicts his colleagues' comments from yesterday. Maybe a little bit less dovish than the market was looking for, and the Canadian dollar immediately jumps, sending dollar CAD down to 132.70. US equities open, they're a little bit lower after the short-lived bounce in the futures. Euro and sterling begin to give up their earlier gains, with euro dollar dropping back down to 110.55 and sterling sliding back below 129.10. Then we get another headline on the US Congress passing of the Hong Kong Human Rights Bill. While China fully expects Trump to sign the bill, they do not expect a high-profile ceremony, nor have him waving it around in front of reporters. Enough for stocks to take another leg lower. The Dow Jones falling by 100 points by mid-morning in New York. Once Europe went home, US equities actually did their best to rally back to flat on the day. But ultimately, all three indices would close lower, although by less than 0.25%. This represented the third consecutive day of losses for US equities, having recently made all-time highs. Forex FX today could really be summed up as dollar losses in Europe being unwound in the US. Euro ends back at 110.58, sterling at 129.07, and dollar yen at 108.60. We have gold dropping a little down to 14.64 as US bonds are sold, pushing euro rates higher. All in all, a fairly messy and inconclusive day, once again dominated by the market reacting to every single headline that comes out around China. I'm sure they'll learn at some point. Moving on to the technical picture. Well, one thing that has been fairly, I think, has really been driving the markets, or the FX markets, over the last couple of weeks. In fact, not just FX markets, but commodity markets and rates markets, has been this run higher in equities, which has seen all three major US indices run to record highs, and the hourly chart I have up in front of us here is actually of the Dow Jones. Having made record highs, we have now had 3 consecutive down days, and when looking at an instrument that has made an all-time high, it can always be a little bit challenging to find some meaningful short-term support should we get a pullback. From this hourly chart, we can see that the Dow Jones adjusted average has been in a fairly steep but steady rise since the middle of October. As you can see, the pullback we've had in the last couple of days from this high here around 128.60, 28.160 down to the close today around 27.770. It's taken us right onto this trend line, and obviously it's sitting a little bit precariously. Should we get a break of that line, we would expect to see a bit of a deeper correction. Hard to really pinpoint support, not off this trend line anymore. But maybe towards this level here, 27.568, or maybe a little bit deeper down to towards 27.400. Obviously, these are all fairly significant moves, but given how steep the rise has been since the middle of October, any pullback, kind of got to expect it to. It could be, fairly quick and sharp if we get it, and it is likely to be driven by developments in the US-China trade negotiations. So just be a little bit wary of that if you are trading stocks, and if you look to the a chart of the S&P and the Nasdaq, I wouldn't look too dissimilar to this. And with that, I shall say good night and wish you a good evening or good morning or good afternoon, wherever you are when you read this or listen to this, and one more day to go. Speak to you tomorrow. Cheers.